I wish to recommend Indo Industries Limited, on which we have initiated coverage with a buy recommendation with a target price of rupees 1030 and upside of 18.3% to our initiating price of rupees 870. Indo is one of the leading vertically integrated home textile manufacturing and exporting company. The company was organized into three business operating segments, which is home textiles, yarn, and consumer durables. Initially, the company manufactured only yarn. In 2004, Indo forayed into electronic manufacturing services of electronic products for the multinational companies brands such as LG, Samsung. Share of this consumer durables unit in this company overall business was marginal, which is less than 5% since FY13 to FY15. Recently, in Q1 FY16, the management declared that they have discontinued the consumer durable segment as it is no longer a revenue generating segment for them, and to focus on the product for bedsheets, expanding the institutional lanes, utility and fashion building. Home Textile division was set up in 2006 and continued its fast revenue growth, building momentum with another record-breaking performance for the year. The US is the largest market for the company, accounting for a major in the total exports of home textile products. The main rationale for the future growth is a higher contribution from bed linen. The revenue share of bed linen is increased from rupees 10,290 million to 13,820 million, a growth of 39% in FY15. The growth in revenue is mainly attributed to home textile segment on the back of higher realization and better product mix. Indo recorded EBITDA with an increase of 19% from rupees 2,488 million to rupees 3,063 million from FY14 to FY15. Indo has increased its bedsheet manufacturing capacity from 36 million meters in FY7 to 68 million by FY15. This bed linen segment is expected to continue to be a key growth driver as the company plans to expand to new geographic and premium product segments such as utility beddings and top of the bed, which are relatively bigger market than bed sheets. Indo is a net exporter with 70% of its clientele in international market. Indo exports accounts for 90% of its consolidated revenue. The contribution of export revenue is increasing at a CAGR of 33% in FY11 to FY15. We expect the export revenue will be increasing with the contribution from institutional lending, utility and fashion building. Indo has exited from the CDR corporate debt restructuring mechanism in Q4 FY15. In FY 2008, due to global recessionary conditions and the consequent cash flow constraint, in July 2008, the company was admitted into CDR cell. Rupees 3,000 million has been sent on restructuring the company's debt. For FY8, the company's debt to equity ratio was at 3.7. With an increased demand scenario and ramp up of underutilized capacity, the company was able to exit CDR by FY15, which is 4 years ahead of the scheduled exit. On back of lower raw material prices, favorable product mix, improving cost efficiency and economies of scale, we initiate coverage on Indo with a buy rating with a target price of rupees 1030, representing an upside potential of 18.3% in a 9 to 12 months period. Thank you.